Good morning, everybody, and welcome to the enCore Energy webinar. Thank you for joining us today. We know you're busy and we appreciate your time. Today, we will be speaking with William Sheriff, Executive Chairman of enCore Energy, and Paul Goranson, CEO of enCore Energy. My name is Janet Lee Sheriff. I'll be the moderator today. First, we aren't going to do a slide deck. Bill is going to speak and talk about the recent news on the Alto Mesa transaction, a plan to accelerate company-wide production. And then he will be followed by Paul Goranson, who will speak to the recent news and the activities at Rosita as there's been a restart of uranium production. It's an exciting time for enCore, and I will step off when Bill begins. Please do ask any questions. There's a Q&A box. I will pop back on at the end and moderate the questions. Paul also is in Corpus Christi. If there's any background noise, it's Pearl Harbor Day. And thank you to all those who have served as a special note. But it's a Navy town and there'll be a bit of noise. So with that, I'm going to hand it over to Bill. And again, thank you for joining us.
Thank you. Thanks, Janet. Thanks, Paul. And thanks to our shareholders and all those other attendees on the call. Very exciting times for enCore. This presentation will be broken down into three major segments. First off, I'm going to take why did we take the approach we took versus doing an equity raise. A lot of people have looked at that. Second will be transactional highlights, and then major benefits for enCore. Then we'll throw in a nice Rosita update at the end. Give you some time for some questions and answers. So first off, why did we not go with another equity raise? There's several reasons here. Number one, the price valuation certainty was there with selling a minority interest of our Alto Mesa asset and enjoying a 67% increase in the valuation or the amount paid over the course of 10 months, less than a year. So we thought that was very attractive. Also, quite frankly, we've raised $170 million in the market in the last 12 months, and we really thought that adding this additional amount, which does give us the ability to accelerate our production base across the portfolio, while a very worthy use of funds, was probably a bit much to put into the equity market after having been so active in it over the last 12 months. Financing obviously would pressure the stock in terms of not only getting the fair value for the stock, just because you, by the time you take a discount in the market, add on a brokerage or subtract a brokerage fee, your legals are probably pretty similar, but by the time you do that, you're looking at a double-digit discount on the share price, and we thought that was not nearly as attractive as the route we've taken. You also would have a warrant and overhang over the market. Either one of them from an NAV value are pretty similar within a point or two, depending on who's doing the calculation and what factors they take into effect. And clearly, this is supportive. It also basically dilutes one of our assets versus if we went equity, it would dilute all of our assets by 10% instead of one of them by 30%. Still allows us to be the manager of the joint venture. It definitely helps us in terms of expenditures on these key assets because by having Boss Energy in as a minority partner, we can certainly accelerate our expenditures at Alto Mesa in particular, where they'll be picking up 30% of the tap. So definitely a very good collaboration for us. It also comes with the potential or the facility actually arranged whereby we can borrow up to 200,000 pounds of uranium. This is good because our production ramp up was tight against our delivery schedule. While we're confident we could have and will deliver into those contracts we have next year, it didn't allow us any flexibility to take advantage of market situations that might develop in the event we were to get a spike or something similar on a short-term basis in the price. So having access to that 200,000 pounds of yellow cake certainly gives us a lot more financial flexibility than we had before. And I think the biggest single factor is this should entirely remove the perspective or the perception of any sort of an equity financing coming in over the course of the next year. We've got plenty of cash in the bank. We've made a remarkable transformation. 6 months ago, we were $60 million in debt. Now we have $70 million in the bank. We do expect the 20 million left on the loan to get converted, and that should be happening before too long. So we've basically made a $130 million swing in considerably less than a year. So when you combine all those factors, it's a pretty strong argument for not going the equity route, and we're quite happy with the way it worked out. I think that would basically explain that end of it. For those of you, I guess I should have prefaced this with an overview of the deal. And that was the Boss Energy of Australia, $1.5 billion market cap company that's very well funded and has just started production at their Honeymoon asset, a very good asset in Australia, has committed $60 million US to buy a 30% interest in Alto Mesa, also providing us with a $10 million infusion via a private placement into the company at a price of $3.90 US, which is a very favorable price, no warrants, and also have arranged the aforementioned uranium loan for us. So that pretty much takes care of it. And I think that with that, I'll turn it over to Paul, and he can handle some of the transactional highlights and also cover the major benefits for enCore, other than the ones I've already spoken of. Paul?
Well, thanks, Bill. So as we said, this joint venture provides a real opportunity for us with respect to the funds we received, the cash we received, allows us to accelerate the rate of development at Alto Mesa, but also advance projects that are going to support Rosita's production. We will be able to add drill rigs and not be concerned about the whether we're going to be have the funding down the road. So this really opens up our flexibility. Also, we're going to be able to advance our projects elsewhere. So we talking about our Dewey Burdock project. We have exploration projects up in South Dakota we want to advance. These are actually not true exploration, but they're development projects. Known resources that we're going to be doing some infill drilling between Dewey Burdock and our property called Dewey Terrace to extend the roll fronts. The other things we're going to be doing is advancing our Gas Hills project up on the permitting scale. This gives us an opportunity. We've been deferring it, some of the work, some of the major work that we need to do, and now this gives us the ability to open up that opportunity as well. And this is mainly because we're prioritizing our expenditures to our production, and that leads us to where we're at with Rosita. Rosita is as we announced last week, is in production now. Our head grades are continuing to build throughout every day. The head grades are continuing to build, and the flow rate and the production is increasing, and a ramp up as we expected. Everything's going as we anticipated. As usual, we have the usual startup issues, etc., but we've been able to resolve those thanks to our experienced team out there. And by getting into production, we're going to be delivering into our sales agreements with production. The uranium loan agreement allows us the flexibility to be able to deliver in those and where the market is very favorable to us on our market-related contracts. One of the other things that we want to do is also advance our other projects at Upper Spring Creek to be able to move them forward in order to deliver feed to Rosita, so we can continue to monetize the investment we've made into the Rosita project and see some real value for it. This all goes with creating enCore as a multiple asset venture. I would like to say that I'm pretty excited about this joint venture with Boss Energy. I've gotten to know the team with Boss. I've known several of their folks on their board for quite some time prior to this, and they're very experienced and good management team, and I think they bring value to the project overall. We see some strategic value in doing this going forward from a business aspect. One of the other aspects of this deal is the strategic collaboration on PFN or prompt fission neutron equipment, the technology. As we announced back in May, we acquired that from Energy Fuels. And we want to be able not only to service the existing equipment that we have and use the technology to do minor upgrades. We would like to take the technology and advance it further to where it becomes a better application for us and for the industry going forward. And the strategic collaboration provides some resources that Boss can bring to the table, the IP and the intellectual property and the technology that we have, we can bring to the table and create something that's a better suited equipment for the future, taking advantage of a lot of the technical advances that have occurred, both with computer hardware, even the equipment such as chips, et cetera, and advancing that to something that's 2023 technology and rather than 2005 and 2010 technology. We believe that will provide a better tool, better response times. We're already very happy with the technology. We believe that's one of the reasons why we're seeing success at Rosita. But we can always see improvements going forward, making the technology more reliable, more marketable, and more commercial. With that, I'm going to turn it back over to Janet so we can take some questions.
Thank you both, Bill and Paul. As I mentioned earlier, there is a Q&A function on the, if you can't find it, it's under the More tab. And we have a few questions coming in. The first question I will put out there, you guys can decide which one will answer this. Can you provide more detail on the potential to accelerate production at Rosita? How do these additional funds impact your planned production rate and timing to achieve this production going forward?
Well, let Bill go first.
Yeah, I'll give you kind of the non-technical view of it, but essentially it allows us, if you've seen our presentation, we've got a bar graph that shows one property after another coming in on satellite. But with the additional funding, there's impetus to run those not in series but in parallel. And for instance, Upper Spring Creek is two different properties. We should be able to start drilling on both of those and have them both contributing to the overall production much quicker. So I don't think you'll see a lot of difference in 24 in terms of our net pounds produced. Even though we're giving up some at Alto Mesa, we're going to be accelerating the drilling program, which should translate into increased pounds. But in 25, you should start seeing a significant change there.
Yeah, I would agree with that. If you've been following our financials, you will you'll see that capital funds were always limited, relatively speaking, and so we've always had to prioritize where our expenditures are going. And it's always been to the point where we were able to meet our objectives and our schedules, but not having much ability to advance our projects faster. The uranium market is transitioning dramatically since if we took a snapshot a year ago from where it was a year ago. And we believe that we want to be one of the leaders to be able to meet those market demands as they're coming up, and having the ability to advance our projects more fulsomely on a parallel path is going to give us that what we believe is that leverage to market, and it's going to allow us to fully utilize our Rosita the plant as it stands right now, and be able to look at even potential if there's a need to increase capacity and in the short term as a result of our ability to increase the feed capacity. That's what we're seeing as with Rosita. Upper Spring Creek is a very good example, as Bill mentioned. We can advance that faster, and to where it's primed to be earlier on the schedule rather than 2025, but earlier. This gives us that opportunity to do that, and allows us to keep accelerating development at Alto Mesa. We can't forget that. We've got a lot of ground to cover out there, and not only the resources we know about that are right around the plant, and also what we have identified in our technical report, but we believe there's tremendous upside where we can start seeing some real commercial projects in the near term that we can advance to bring into production sooner as well.
Your answer, Paul, sort of goes into the next question. Do you expect Alto Mesa to produce more uranium than you would otherwise have produced without the joint venture?
Yes. So if you look at our publications, Alto Mesa has an ion exchange capacity limit of about 1.5 million pounds per year. And that's strictly due to the physical limitations of the equipment. And the plant is configured where the well fields are all pipelined into the central plant, and the ion exchange plant is there. With the technology we're using at Rosita, which uses satellite plants and a central processing plant design, we can add capacity at Alto Mesa on the ion exchange side by building satellite facilities and allow us to access more remote locations, so we're not limited to long pipelines to feed the plant. And this will allow us to up the production rate and process resin at Alto Mesa in order to be able to increase our throughput. We have enough capacity on the resin processing side and also on the precipitation and drying side to do 2 million pounds a year. This will allow us to be able to fully utilize that capacity by incorporating these concepts. And this is what we intend to do with the funds. Part of the funds we have is to advance the ability to do that and do some capital improvements at Alto Mesa to be able to work and operate with remote ion exchange plants and process resin that way.
Thank you. Bill, did you have anything you wanted to add to that?
Nope, I think that's pretty clear. I mean, ultimately at the end of the day, the number of pounds at Alto Mesa are the number of pounds, but I think what you'll see is the growth in the resource will come a lot quicker, and the production will come a lot quicker. The total production at the end of the day won't be affected. Obviously, it's Mother Nature's endowment, but being able to access them in the coming decade instead of over the coming next 3 decades is going to make a big difference in terms of bringing that cash flow and profit forward.
A question about the transaction itself with Boss. Why did they also buy shares and not just the Alto Mesa interest?
It was all part of the negotiating path that we wanted to take, and their willingness to work cooperatively with us. Quite frankly, we looked at the 60 million, which was great, but as Paul just laid out, a pretty healthy, ambitious capex and development expenditure budget to really accelerate our production plans all the way across all of our asset base in the U.S. And we felt that 70 million was the right number for us to be able to do that. Here again, we don't want to have to come back into the equity market after so much in the last year. It's been a dynamic growth phase for us, and couldn't have done it without the support of the markets and the shareholders. So thank you. I know a number of you were on the call. But we thought it was time to generate that cash through other means, and obviously we welcome Boss as a shareholder as well, and are thankful for their topping up the treasury for us to where we can achieve those plans that we have outlined.
And can you clarify how Boss participates in the joint venture?
I can take that.
Yeah,
So under the joint venture, Boss will participate obviously as a minority partner. We'll be doing this under a joint venture company, which both companies will jointly own. Us enCore 70%, Boss 30%, and we'll be operating it with joint funding based on cash calls, budgets, etc., and a management committee where enCore will be the manager of the operation. So we'll be the operator, and also will be the majority vote on the management committee. That gives us, we believe that gives us a lot of strength, but also brings in the ability through this joint management, brings ability to have some additional technical support from, Boss has some experiences they can bring into this operation. It's not just about money, it's also about synergies. And the way the JV is structured, it really, I believe, will really capture those synergies.
Thank you. Bill, did you want to add anything to that?
No, I think Paul summed it up really well. We've got we've gotten to know Boss real well. Paul's known him for a number of years, and I've gotten to know them real well during the process here. And I think the cultures blend well. I think they'll make a very good partner moving forward. I think there'll be some mutual benefits in terms of the way we do business for both sides, especially when it comes to the in situ process. Basically, in essence, although spelled out, it in essence certainly increases both sides' at least access to in situ technology and the experts within it. We're at enCore fortunately well over endowed with technical talent, thanks to Paul and the people he's worked with over the years has been able to bring along. We're fully staffed in terms of ISR experts, all the way from the field superintendent level all the way up through management and into the board. So more than our fair share, but even so, it's always nice to have a couple more voices in there. And so I think you'll see very good results from this collaboration. Well beyond the obvious economic benefits.
Thank you. I realize the joint venture is on Alto Mesa. I do want to flip over to Dewey Burdock and Gas Hills. There's a few questions in there. I'll kind of summarize a few into one. With the arrangement with Boss, where are you on construction and operations at Dewey Burdock in South Dakota? And can this arrangement pull forward the production timelines for both Dewey Burdock, Dewey Terrace, and Gas Hills?
I think we're going to have a collaborative answer on that. I think Paul can bring you up to date on where we are with permitting with Dewey Burdock. We're getting an awful lot closer. So I'll circle back to that in a minute. But geologically, we'd certainly looked at combining our Dewey Terrace resource, which is just across the Wyoming-South Dakota border on the Wyoming side, along the same roll fronts that the major Dewey Burdock deposit in South Dakota lie. And we'd planned a small drill program this year to try and start tying those two together. And I think you'll see as a result of the budget that program being significantly increased. And I think we'll make a very strong effort, and I look forward to some good success, which will enlarge, obviously, the overall resource. But more importantly, those roll fronts don't know where the geopolitical boundary is. So we're quite confident that we can have one much larger deposit than the 17 million pounds you have on the South Dakota side, and then just a handful on the Wyoming side due to lack of drilling. And once we combine those two, then it obviously gives us a little bit of more flexibility in choosing exactly where we want to build the central processing plant. The project that big will have some satellite aspects to it, clearly, but I think everyone's probably vast majority of people are aware there are different regulations in Wyoming versus South Dakota, and we may find it to our benefit to look to the Wyoming side for the central plant. But all that's dependent upon success at the drilling and things of that nature. But Paul can address the permitting issue there. Give you an up to minute there because we're getting very close in terms of federal side, and also answer that towards Gas Hills.
Yeah, thanks, Bill. As earlier this year, we've got the NRC license was finalized after several appeals to the court. We're currently doing appeals on our EPA permits right now. There's 2 appeals going on. Based on the fact that the EPA relied on NRC's environmental impact statement to be the basis for their approval of the permits for Dewey Burdock, that we believe that and that the courts have affirmed that the quality of the EIS, the outcomes of the EIS. We believe that we're going to prevail in a relatively quick order. The schedules for the first set of appeals have been set for early next year, and we expect to see an outcome relatively quickly after that, and then hopefully wrap up the second level of appeals after that. And then it's a matter of finalizing our state permits. As we mentioned before, is that the state has basically put our current permit applications with them aside until the federal process is exhausted. But we see this happening in relatively short order. I was very pleased with the fact that we got a resolution to the NRC license, which opens up the opportunity going as far as scheduling goes. So as soon as we get some clearance and visibility on that, we'll begin to do the preliminary work for Dewey Burdock. And then once the permitting process is complete, we intend to start construction. Whether that's 12 months or 18 months, will be dependent on the schedule of the permitting process, which honestly is to be very honest, is not entirely in our hands. That also allows us the ability to advance Gas Hills, since Gas Hills is part of one of the questions is that Gas Hills is a true brownfield deposit that's in a previously operated area, mined area. It's also got ability to expand through acquisition of other properties. But the advantage is it's in Wyoming. It's an agreement state, and we believe that we can advance that fairly quickly. We've had started preliminary environmental work. But this allows, we intend to start building these applications for our plan of operations and our radioactive materials, source material license for the state of Wyoming soon, now that we've got a pathway ahead of us. So that's going to advance. I think it's going to be a horse race as between whether Dewey, Burdock, or Gas Hills hits the mark first, but we're going to continue to advance that project.